What's up, everybody? Welcome to the Stocks channel. Today we're going to do technical analysis on all of the weekly charts of the indices, and I'm going to challenge you on how you should be viewing the year 2024. And if you watch this entire episode, it should immensely help you understand how you should be viewing the market and what are the very critical levels you should be paying attention to very early in the year. So sit back and relax, and firstly we'll be looking at a weekly chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right, let's waste no time. And the first thing I want you to understand about the market in 2024 is that we had a very powerful bull run last year, and that did push us to brand new all-time highs in the Dow Jones and the Nasdaq 100. And the SPY ETF is currently knocking on the door from the 2021 highs, trying to break out and make a brand new all-time high. So the very first thing you need to consider in the year 2024 is whether or not the S&P 500 is going to outperform the money markets. So for the sake of simplicity, I'm going to assume that the money markets in 2024 are going to make a whopping 5%. And obviously I'm joking when I say whopping, but if you consider the fact that you can put your money in a money market and make a guaranteed 5% without any volatility, that is going to influence the way you view the market, because if you're going to put your money at risk in the stock market, which we all know there's plenty of risk when you get into the stock market, you better be damn sure you're going to make more than 5%. Otherwise, why are you putting money at risk when you could go make a guaranteed 5% in a money market? So the first thing we need to ask and answer is whether or not I think the S&P 500 is going to beat the money markets of 5%. And I absolutely do think it will. And the reason I do believe the S&P 500 will beat the money markets is because I'm giving a price target for the S&P all the way up to about 506 to 518. If you told me I had to only pick one number, I would probably pick somewhere in the middle, right around 509 to 510, which means from last year's close up to my price target is a 7.8% gain for the year. But the more important thing is I could be wrong and the market could go higher, and we're already pulling back early in the year. So if you measure from where we closed the week, that is now nearly a 10% gain. So obviously it's going to depend on when you entered the market and what your cost basis is, and obviously how much risk you're willing to take on. But I do believe this is going to be another bull market year, and I do believe the S&P 500 is going to break out into the 500s, and I do believe we're going to have plenty of volatility in this election year. So you need to really understand early in the year, what are your plans, what are your goals, and how are you going to reach those goals, and how are you going to manage your risk? As I just said, you can go get a guaranteed 5% in a money market, so if that's all you're looking for the year, there's no reason for you to even mess around with the stock market. Now that will be a problem for big money to go decide. When they're moving billions of dollars, they may be happy with 5%, but if the market starts to have a very bullish year, they're going to be very disappointed if they could have made 10% or more in the stock market. So just keep that in the back of your mind this year. That is going to be a very important theme, and that's going to be a very important topic. And now looking at the weekly chart of SPY, let's get more in line with the price action technical analysis, because we are getting a pullback very early in the year. And we are starting to see a rejection from the previous all-time high on SPY, which was that closing weekly price right around 475. So the first thing I see when I look at this chart is that it's going to be very possible that we get a simple pullback to retest the breakout before we go up there and hit those price targets. And that would be a simple pullback from the previous all-time high down to this breakout level right around 457, which is going to be a normal everyday pullback between 3 and 4%. And the exact percent here shown is 3.81%. So it is possible from the highs in 2023 that we get a 3 to 4% pullback, find support at the breakout of the July highs, and then continue pushing higher to break out to a brand new all-time high. Now I'll go ahead and read the prices that I have for you drawn here for the brand new all-time highs, and a very modest all-time high would be right around 488. And if we break through that modest all-time high at 488, then we'll be looking for prices around 506 and 518. Now all the way up to 518 from where we closed the week is just over 10%, which is obviously a decent return, but not nearly as good as the over 20% return that we had last year coming off of the bear market low. Now, if we continue to pull back towards this support all the way up to the 518 price, that's a 13% return. So obviously the longer you can hold out or the lower the cost basis you can get, you are going to have a much better year in the event we break out and go reach those higher prices. Now, also keep in mind, anytime I give a 2024 price target, that could happen at any point in the year. And if you're only a short-term trader, this information of weekly technical analysis could be completely useless to you. So understand your time frame and understand how you're going to reach your goals, because when I'm talking about weekly charts, nothing I say on a weekly chart is going to help you become a better trader on Monday or Tuesday of next week. So understand every single candlestick on this chart is one entire week's worth of price action. So this is for you longer term investors or longer term swing traders that are trying to understand where you should be looking to position this year. So the very first thing I notice in the year is the number one place I would be paying attention to for loading up near a potential good risk level is going to be that level right there at 457. And if we break that, I'm going to be paying attention to where that rising 20 weekly moving average is. And if we break below that, then I'm going to be looking for the support trend line that connects the bull market lows. And that could push us anywhere between 430 and 440, depending on when we get there. So there's plenty of risk levels on this weekly chart, and it's very obvious looking at the weekly chart that we're in very strong bull trends. And there's no reason to believe that a bull trend is just going to roll over and die without some evidence from the price action or some type of black swan event. And I will acknowledge up front, with the fundamental picture of an inverted yield curve, it is completely possible to get a black swan event this year. But because I can only trade the chart that I currently see and the price action I currently have, in the event that we get a black swan, I would simply just adapt immediately, whether that be reducing long exposure overnight or simply watching a critical level that price action has to break down below in order for me to get risk off. So do not fear a black swan event and do not be crippled by fear, because every single year there's going to be people out there predicting a recession and a stock market crash. And if you just rewind to very early last year, there were plenty of people predicting for stock market crashes and bear markets and a continuation of the bear market we had in 2022. And there were even people that were predicting quote unquote super crashes that by the end of the year look like complete clowns for scaring everybody out of the market as the market pushed to a new all-time high. So ignore all of the bull crap and all of the noise and all of the fear-mongering crap. Simply follow the chart and the price action, and that's exactly what I'm teaching you to do each and every day with my technical analysis. So the S&P 500 is very simple. It's likely we could get a pullback down towards 457 or any support above that, and then if we can continue to push higher and keep this bull trend, I will be looking for a brand new all-time high. Next up, we're looking at a weekly chart of the NASDAQ 100 triple Qs, and the triple Qs are doing the same exact thing as SPY. Even though they did push higher to a brand new all-time high, we are now getting a rejection right around 410. And the pullback to the previous all-time high meant we needed to hold above 404. So now that we're below 404, it's possible we get an additional pullback down towards the breakout of July, which is going to bring us back into the 380s. So from the 2023 all-time high down to the breakout retest, that's a 6.4% pullback. And if we go any lower, we could come down to the support trend line in the 370s. So anywhere between a 6 to about a 9 to 10% pullback or correction would be completely normal here. And then from that, it would be completely normal to continue to push higher to a brand new all-time high. And I do believe it's very likely that that could happen very early in the year unless we get a deeper correction now, and then we would be pushing to a brand new all-time high later in the year. So all you need to pay attention to in the very short term on the triple Qs is the support zone between 383 and 384. That is a very valid retest from the breakout, and we did get a very powerful rally at the end of last year. So it's completely possible we give some of that rally back and put in a higher low before we continue to push higher. So in the triple Qs, watch that level right around 383, the rising weekly moving average, and the support trend line right around 370. If we can hold above all of that support, the bull trend is still well and fine, and then we'll continue to push higher. And if we break to a brand new all-time high, I have the price targets here at 417, 426, and then just below 430. Jumping over to the weekly chart of the Dow Jones, again, we hit that new all-time high at 377. And if we start to pull back here, it's very likely that we come back down to retest the previous all-time high, which would bring us back down towards 363. And then if we continue pushing higher, it's likely that we would start pushing higher towards 381, 391, and then a nice even round 400. Now, if we break down below the previous all-time high at 363, then we come back down to the July high, which is going to be right there at 354. So these are your weekly risk levels, and it's going to be very simple to follow them as long as you have a very unbiased and disciplined approach of following price action. Jumping over to the Russell 2000 IWM ETF, you can see that we're rejecting around this previous weekly high at 200, and this is a very long consolidation within the weekly chart on IWM where we have been going absolutely nowhere since June of 2022. Now, if we start to break above 200, this is going to look like we've reached a double bottom breakout, and I do believe that's going to be enough energy to push us all the way back to the previous all-time high, which is an over 25% gain from where we closed the week. But the only way I would assume that we're going to that price target is if we can start to break out above 200 and hold the breakout. So 200 is going to be a very bullish breakout, especially if we can put in a higher low and then bounce and get that breakout. We should start to see the small caps looking a lot more bullish and start playing catch up from the underperformance that they had last year. Now during the pullback, I want you to watch this level right here between 190 and 191. And if we can hold above that support, it is likely that is going to be the higher low before we continue to push out higher. Now, as we start to push out higher, I think it's very likely we're going to find resistance between 208 and all the way up here right around 223. And then if we can break through that, then we'll be pushing higher towards 240. So I'll go ahead and put that level on the chart right there, right around 223. And if we could break above 200, that's going to be the price target. And then if we could break 223, we'll be looking for 241. So I would pay a lot more attention to the small caps this year because there could be some outperformance here in the event they do get that bull breakout and start breaking above that level at 200. And then very quickly, I want to look at the ARKK ETF. And you could ask the question, why are we looking at this ETF? And it's a very simple reason that I give on the Stocks Channel Discord, that if this turd is starting to float, that could mean that we're starting to have a rising tide. Essentially, what that means is while I do not believe you should invest in this ETF, there are a lot of stocks in this ETF that represent risk on sentiment and growth. And this is starting to look like a weekly inverse head and shoulders that could easily send us to these higher price targets around 68 in the event we can hold a breakout above the neckline right around 50. So if ARKK could essentially hold above this rising weekly 20 period moving average and start pushing higher above 50, I do believe we could see 68. And if you just do a simple measurement from 50 all the way up to that price target, that is an over 38% gain. So again, I do not suggest investing in this ETF, but it's definitely an ETF you can trade as long as you're managing risk. And it's hard to deny that this is a very bullish looking inverse head and shoulders on the weekly chart with a rising weekly 20 period moving average. And then one final point I want to make is very quickly looking at the E-minis of the S&P 500, and then we'll also look at the NASDAQ 100. We have not hit the previous all-time highs on the futures contracts. And as you can see on the future contract of the ES, we are now getting a perfect retest of the breakout of the July high right around 47.11. And I think this is a perfect place where we could get a very simple bounce up to the previous all-time high on the E-minis and test the previous all-time high from 2021. This, without a doubt, would be a very bullish breakout in the ETFs like SPY and the triple Qs. So this is definitely something I would pay attention to, especially if you're a trader of the E-minis. So next we'll look at the NQ, which is the E-minis for the NASDAQ 100, and we're getting the very similar retest of the breakout of the July highs, and we have not hit new all-time highs in the NQ. So if we can hold this level right around 16,255, I think it's very possible we can push higher towards 17,527. So again, very simple concepts of simply following the trend in the price action, and that's a constant reminder we need to stay bullish as long as these charts are looking incredibly bullish. We let the chart and the price action do all the talking, and we always remember that the trend is our friend, meaning there's no reason to get overly bearish when we're in incredibly powerful weekly bull trends. So just to finalize, I'm going to jump back over to the S&P 500, and I want you to remember what I said about the money markets, because if you're going into the stock market this year, you need to understand that you are putting your money at risk, and if 5% is enough, you can just go sit in a money market and have a very successful year. I'm not saying to do that, because if you are a successful trader, especially if you're trading with the Stocks Channel or Bank Trade Alerts, we are going to do far better than a 5% year. I'm actually predicting this is going to be one of our best years ever, especially on Bank Trade Alerts, because it is going to be a very volatile year, and volatile years make for very great trading. However, if you are not a great trader, you're still learning, this could be a year where you suffer massive losses, especially during the pullback when people are starting to predict for bear markets and crashes. If you are going to be affected by all of that negative sentiment and noise, it is much better for you to trade with a system that tells you exactly what to do, like Bank Trade Alerts. So you need to decide what's best for you. I am very confident we are going to absolutely destroy the market this year and crush it even more than we did last year. Last year, we made nearly 60%, and this year I think we're going to do even better than that. But again, this is a very disciplined and patient approach that you need to take with the market, and it's always around following the market and not anybody's bias or anybody's predictions or anybody's speculations. So I realize that I'm telling you I think we're going to new all-time highs and I think we're going to these price targets, but the important thing is to remember is that I think these things are going to happen, and the market couldn't care less what I think. So it's very possible I end up being incorrect, and that's why we're going to follow the chart and manage risk, and that's why my personal speculations and predictions have nothing to do with how we trade. So again, I think this is going to be a very great year. Make sure you understand these very critical weekly levels, and make sure you have a plan on how you're going to respond around these levels in the event price action bounces off of them or breaks down through them. Always be prepared for both scenarios and have it in your trade plan exactly what you're going to do around following price action, and that way you can leave out the emotions and just follow your plan. If you can do that, I have no doubt you're going to crush it this year and you're going to be a very profitable trader. So if you want to come crush the market with us, consider joining Bang Trade Alerts, which you can find out how to join by clicking on the link in the description of this video. And if you want access to my intraday updates and technical analysis, you can join the Stocks Channel Discord server as well. So thank you for watching, everybody. Let's go crush the market in 2024. And as always, I will see you in the next episode.